Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, December 8th, 2024. So we saw the bulls pull off their normal thing where they gap it up. The first high is made within the first 30 minutes, and from there they have a rough time throughout the day. Now, this one actually trapped me because these are continuation bars, these big bars right here. So typically they retrace and then we come back up and test or break these highs. And it looked like it was a right trade right here. This is right about where we were looking for the bounce to come. And instead of writing calls like I typically do, I decided I was going to try to actually just buy a call, and it was not the right decision because we bounced up and we came down, and I ended up getting stopped out. We lost about 3,200 on the fund. First time we've taken a little hit like that, but it was It was me that did it. That's not the normal trade that I make, and I'm not really quite sure why I did, but it is what it is. We're still up 55% for the year. So you can see exactly where the bulls are buying. This is, I would say this is more on your retail end because A, it's a 5-minute chart. B, they're buying a 200-day moving average. So this is, can extend, but you can see right here, we're starting to round off. So the energy for the bulls is starting to, looks like it's running a little heavy right now. If they are going to try higher and, we're going to follow this sequence, we would be looking for a move to come somewhere up into 6102 or possibly 6107. If they break away from this, that's when we start looking into the 6100. Now the bears, they're going to have to get it through the lows on I think that was Thursday. It was, yeah. So if they can get through the 6072 level, that will give them an opportunity to just come in. It's not that much of a drop right here, but this is really an important support level, 6063, because if they lose it, then we're looking at a move to probably come down and close the gap at 6050, and you can see we're pretty close to with the moving average. So seeing a test of here would make sense. Like I said, we have actually some sell signals on the NIAD. Hang on one second. Okay, so here you can see we have the NIAD that's going one way as the S&P is making new highs. And really the chart that I would be, just really concerned about if I was just bullish on this market, and it would be the put call ratio here, because this is dangerous where where actually price is right now for this indicator. And the thing is that everybody's really diving in, as typically this is when we get pretty nice size or 100 to 150 point declines. Now again, I'm going to continue to say this, that seasonality is on the side of the bulls. So even though indicators are suggesting we're going to get some kind of backing and filling, the seasonality trade right now is in full swing. So it's hard to really fight that, but you can do it on a daily basis and just remove the long-term outlook out of it. So again, if the bears can get through these lows to 6072, this is the last line of support right here, 6063, until we come down and test this the 6047. And again, on the upside, 6102, 6107. If they get above that, then we start looking at the 6100. We didn't, there really was no clear buy or sell signals on this. We still have this one that is extending here, where you can see we're just making lower highs. So that's a divergence right there on the 60-minute chart. Nothing has really changed on that. We still have a defined sell signal on here. Getting a little bit into the oversold levels, so that's gives us kind of a little idea if they do try higher. But you can see right here the 6056. This is also our 6050. This is also the moving average. So this is going to be the important support for the bears to get through. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.